So I'm going to explain how you can use gaps to make money trading. So what is a gap? A gap is the difference between one day's closing price and the other day's opening price. So this is Thursday to the left of the blue line. This is Friday to the right of the blue line. Thursday closes at 4:36. Friday opens at 4:33. It's roughly a $3 gap down. How do you use this in your trading? Well, on days where it gaps down, generally it will touch the previous day's closing price, this red line here. Actually, we're looking at SPY right now. With SPY this year in 2023, the gaps down get filled 74% of the time. So 74% of the time, if you buy on a gap down and you're long, you're gonna make money. And at least if you're targeting this red line, which is the previous day's closing price. 74% is such a significant number that it's impossible to ignore. And on days where there are gaps down, you should not be short unless there is an anomaly. So that is how you can use gaps to make money trading.